Good morning, everyone. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to thank you all for joining us on our breakfast meeting this morning. It is Thursday, the 26th of August, 2021. As always, this meeting is being recorded and the audio file may be shared with third parties. The meeting is also being broadcast live on our Vetiva online page on Facebook and is set to last for 30 minutes. Over the course of the meeting, if you do have a question over what any speaker is saying, you may drop them in the Q&A box and we will treat these questions after all speakers are done. On our agenda today, we will get a rundown of the global equity space from Symbiot, our global equities desk. After this, we will move to Dapo, who will give us a rundown of fixed income and currencies. We will then conclude with Justina from Frontier Africa Reports and their own updates. We will now start off with Symbiot from our global equities desk. Good morning, Symbiot.
Good morning, Dozie, and good morning to everyone. So I'll be doing a quick review of the performance of some of the equities markets across West Africa, and I'll be starting with BRVM. In the BRVM market, as expected, investors took profits. Investors took profits in some of the banking and consumer goods stock as the index closed marginally down by 1%. Leading the losers chart was PAM Cote d'Ivoire, the Bank of Africa, Senegal, and Benin. Then we also saw Solibra in the consumer goods space extending its losing streak by 6%. Overall, market activity traded down with 6%, with a 6% and 30% decline in volume and turnover, respectively, while ETI dominated activity charts. So going into today, we expect to see some profit-taking activities continue after the bullish run the market has seen of about 2 weeks, with possibility of closing the session mixed. Over in Ghana, the Ghana equities market also closed down by 75 basis points. However, the market saw improvement in terms of activity level. Total of 12 equities participated in trading and closing the session with 4 gainers and 1 loser. MTN Ghana was the sole loser with a 1.59% price depreciation. The stock also was the highest, had the highest volume of trades yesterday, about 1.97 million, which accounted for about 94% of the total volume done yesterday. As expected, like I mentioned, MTN Ghana continued to boost activity level, and we believe that will continue in subsequent sessions. And aside this, we expect the market to close to trade quiet today. In Nigeria, looks like 3 markets closed negative yesterday. In Nigeria, the index also shared 3 basis points, with all sectoral indices closing the session in the red zone. And just the industrial index traded flat yesterday. Market sentiment has been bearish. We've seen market breadth stay negative, and yesterday, investors took profits in names like Dangote Sugar, about 2.78%, NACO, Owando, and GTCO, among others. Speaking to activity level, this traded mixed, with volume inching up by just 0.3%, while turnover declined by 27.47%. Overall, we saw a stronger sell side interest in the market. And for the banking space, we have continued to see increased participation in some tier 1 names, and we believe that half-year results would have an effect on the market short term. So going into today, we expect to see market trade in similar pattern, with possibility of investors taking positions ahead of the corporates released in the banking space. Thank you, and that'll be all from my end.
Thank you, Symbiote. We will now move to Omorige for fixed income and currencies. Good morning, Omorige.
Good morning. Good morning, everybody. System liquidity declined marginally yesterday to open at 80.92 billion negative, coming from the 43.86 billion negative that was recorded on Tuesday. Despite the decline in system liquidity, money market rate moderated by over 246 basis points in the absence of any significant fund pressure in the market yesterday, as OBB and overnight rate closed at 13% and 13.33% respectively. Coming into today, we expect interbank rate to trade at higher levels, given that players will try to make funding provisions for the additional NTB auction sale that I heard yesterday. The parallel market remains stable to trade at 521 naira to $1, while the earning window opened at 411.74 naira to $1, trading at a high of 413 naira to $1, while the closing rate was 412 naira to $1. Brent and WTI both lost 0.6 and 0.8% yesterday after 4 days of consecutive gains to open today at 71.8 and $67.81 per barrel respectively. As expected, the TB's market traded on a very muted note yesterday as market players decided to wait on the sidelines ahead of the NTB auction results. At the auction, the DMO sold a total of 307.33 billion across the 3 tenors from an offer amount of 157.21 billion, with stop rates on the 91 and 182 days remaining constant at 2.5 and 3.5% respectively, while the marginal rate on the 364-day paper declined by 55 basis points to close at 6.8%. The cut in the marginal rate on the 1-year paper was largely spurred by the significant subscription that was seen on that end, and this was expected given that the CBN has stayed away from the OMO space in the past couple of weeks. So in the secondary market, average benchmark rate rose by about 15 basis points to close at 4.8% yesterday. The OMO market traded on a very active note with slight bearish sentiment seen across the curve. The most actively traded maturities yesterday were the 15th February 2022 and the 22nd February 2022 maturities. Overall, average benchmark rate rose by about 7 basis points to close yesterday at 5.89%. The bonds market traded on a relatively active note yesterday as players continue to cherry pick offers across the benchmark curve. We witnessed rates decline majorly along the mid to long end of the benchmark curve, with interest majorly seen on the 2027, 2036, and the 2050 maturities. The most actively debt maturities yesterday were the 28, 36, and the 2049 papers, with average benchmark rate declining by about 4 basis points to close yesterday at 11.72%. The Eurobond market also saw its own fair share of activity yesterday as buy-side interest we are seeing on the long-dated sovereign maturities after we have witnessed sell-offs across those maturities as players try to create liquidity for the upcoming Eurobond issuance that's happening next month. We saw some players coming to the market to take advantage of those high levels that we are seeing on those maturities, with offers on the 2049 Eurobond touching the highs of 8.15% levels. The most actively traded maturities yesterday were the 2032, 2038, and the 2047, with the 2049 maturity as well. In the corporate space, we also witnessed some buy-side interest, majorly on the EcoBank Eurobond, the 2024, 2026, and the 2031 maturities. For our expectation today, we believe that the current bullish sentiment in the bonds market will persist as players continue to try to cherry pick attractive offers across the benchmark curve. While in the TB's market, we expect rates to moderate further in the secondary market today, following the rate cuts on the marginal following the rate cut on the 1-year paper at yesterday's auction. However, the significant amounts that was sold on that particular end might help taper the moderation that we expect to play out in today's session. That'll be all for fixed income. Thank you very much.
Thank you, Maria. We will now move to Justina from Frontier Africa Reports in the update. Good morning, Justina.
Good morning. Good morning, everyone. I hope you can hear me.
Yes, we can hear you.
Okay. So from Frontier Africa Reports, right now, I just saw that the big story from West Africa, and that's in Nigeria here, the GDP report is out, and we would take a look at it as time goes on. It just came out now. So moving on, we go to the big story from yesterday, which was the tax appeal tribunal in Lagos ordering MultiChoice Nigeria Limited to pay 50% of 1.8 trillion naira as tax backlog to the Federal Inland Revenue Service, FIRS. And that was yesterday. According to FIRS, the backlog is they took an investigation over I think last month, saw that MultiChoice was owing a lot from taxes that they had not paid to the government. But yesterday also, MultiChoice refuted this claim, saying that the directive does not compel it to pay half of the disputed tax, but that it is expected to make a deposit that's equal to the tax paid in the preceding year. That's one half of the disputed tax. And we will see how that unfolds as time goes on. About 7% shareholders of Eternal PLC entered a sale and purchase agreement with a company named Preline Limited to buy out 60.98% of Eternal's shares. I think it was in December when these companies came together to say that they wanted to divest their shares and sell it to a company. And now we know that it is Preline Limited that is buying out these shares from Eternal PLC, making it a majority shareholder of the oil marketer. In the Democratic Republic of Congo, it is saying that it plans to revive its economy via an industrialization master plan that is likely to raise $58 billion for the country. The plan also aims to reduce the country's dependence on foreign help, because the country has gone through a lot of issues ranging from poverty and a lot of issues going on over there. But now they're trying through this push, they'll be able to raise enough money to cushion the economy. Now, in the Southern African region, where South Africa's economy has grown by a massive 550 billion rand. And this is not by magic or by any accident, but by changes in the methods by which the Statistics Office has been able to calculate the size of the economy. According to them, they had to change the reference year to 2015 from 2010. Now, the Statistics Office on Wednesday announced that the country's GDP in 2020 was 5.5 trillion rand, and that's 11% larger than previous estimate of 4.97 trillion. Now, South Africa is now the second biggest economy after Nigeria. South Africa's deputy central bank governor says he thought the bank would normalize interest rates fairly slowly, given that inflation was likely to remain well behaved as time goes on. According to Kube Naido, that's the deputy central bank governor, he expects that inflation is likely to behave itself over the next 12 months and says the repo rate would probably increase towards 6% and 7%. In Angola, where the national oil company Sonangol has begun speeding up its restructuring plans and exploring new financial solutions in accordance to requirements of today's international debt market. Sonangol says it is speeding up its divestment program and is expected to rake in billions of dollars through the sale of its non-core assets to strengthen its balance sheet. Sonangol has been selling a lot of his assets for some time now, but now it's saying that it is going to speed it up because it's planning to also it's planning to also go into the exploration business. That's his new line of business for now. Now, in the East African region, Kenya's Capital Markets Authority is considering authorizing companies to hold hybrid meetings as the COVID-19 pandemic continues and vaccinations pick up. This means that listed companies of the Nairobi Stock Exchange Nairobi Securities Exchange will have to veer into holding virtual meetings once again. Of course, this is not new to the listed companies, as it's something that they are already used to, but now they will have to take it more seriously because of vaccinations that has come into play again. Now, Kenya and Tanzania have signed three key deals in order to enhance bilateral relations between the two eastern countries. The deal also will push for lifting trade barriers between the countries, and they have set December as a time to remove most of the non-tariff barriers. Now, Mauritius Central Bank is expected to keep its benchmark interest rate on hold at a record high of 1.85% until the economy shows signs of a sustained recovery, and that's according to Bloomberg. In North Africa, Egypt's finance minister, Mohamed Mayet, has revealed that the size of the country's first sovereign sukuk issuance will range between $1 billion and $2 billion. Before, we didn't know how much what was the size of this, we didn't know what the size of the sukuk issuance would be, but now he's revealing that it will be between $1 billion and $2 billion. He said this during an interview with CNBC Arabia on Wednesday. Also on Wednesday, the Egyptian Exchange Management met with leaders of Egypt's first venture capital company, that's Fatura and Paynas, to discuss growth opportunities and increase their business through the EGX. What EGX has been doing for some time now, and what it plans to do, is to encourage startups, especially those in the information and in the ICT sector, to be able to list and also do their businesses through the stock exchange. And in Algeria, Algeria has cut its diplomatic ties with Morocco, citing what it called hostile actions from Morocco. Algeria is accusing Morocco of using Pegasus spyware against its officials and failing in its bilateral commitments. But on the other side, Morocco says it regrets this unjustifiable move by Algeria because, according to Morocco, it says it remains a credible and loyal partner to the country and that it doesn't hope to cut ties, but if that is what it is, then it is what it is. I am sure that they will have talks over it as time goes on. And that's all from us in Frontier Africa Reports. Thank you for listening.
Thank you very much, Justina. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and we will give you an opportunity to speak, or you may use the Q&A box and send in your questions. For those watching on joining us on Facebook, you may use the comment function and we will treat your question. We already have one question and it goes, we have continued to see a significant decline in the rate on the 364-day tenor. Do we see this continuing in subsequent auctions, and where do we see rates at the end of the quarter? And then the second question is, do we also expect this rate decline to be positive for the equities market? I think the first part of the question, Morige from the fixed income desk will take. Morige, you may go ahead and respond.
Okay, good morning. Thank you very much for that question. Okay, basically two things. The first one is, like we have always said, the supposed Eurobond issuance that is happening, or the anticipated Eurobond issuance that is happening next month, has poured a bullish sentiment in the market as players start trading views that, given that the DMO will be tapping into the international capital markets, they might not be very aggressive in the local front. And that has played out in the past couple of auctions. So, but what we have seen is quite contrary to the expectations that we had. We have seen them, aggressively oversell at the previous auctions. Even at yesterday's auction, they oversold by over 100 billion naira, but then that has not led to an uptick in rates. So they have been overselling and also cutting rates. We have seen rates moderated. So the expectation generally was that the DMO was going to reduce their aggressive stance in the auctions going forward, given that they are going to be tapping into the capital market, international capital market. That has not largely played out. What has played out is the moderation of rates, but they are still aggressively tapping into the local markets. So what also intensified the rate decline that we saw yesterday was the fact that the CBN has stayed away from the OMO market. We have really not seen any supply in that end. I think for over 1 month now, there have not been any OMO auction, and that's understandable given that coming into as at the time they did they banned local investors from investing in the OMO securities. One of the reasons they cited was that the OMO debt was too much and they were looking for a way to minimize it. And I think they have been able to achieve that in the past couple of months. So they have gradually reduced their OMO debt, and also given that they have been able to control liquidity by mopping up liquidity by debiting CRRO from the market, and system has also not been very liquid. Like I already said today, system opened about 80.92 billion negative, coming from the 40-point-something billion negative that was recorded yesterday. So given our outlook, we believe that rates will still continue to moderate. Rates will continue to moderate towards the second quarter. And if we are going to see a change in rates, it might be in the third quarter. And we don't think it's going to be very significant. The moderation is still going to persist on the back of the things that I've already said, the anticipated Eurobond issuance. Also, we don't believe that the DMO is still going to be very aggressive at the subsequent auctions as they have been. So if they reduce the amount that they are going to be tapping from the local market, as against what they have been doing, they have been taking more than what they offered and still cutting rates. So what will then happen if they decide to take less than they are offering, or even take what the exact amount that they are offering? We'll probably see more moderation in rates in subsequent auctions. So we anticipate that the secondary market will react to this. We see rates moderate. The 1 year will probably get to the lows of 6%. But then again, because they're oversold, the supply will be significant. That might just help to keep rates at reasonable levels. But going into next month, we expect that the rate moderation will intensify after the Eurobond issuance. I hope that answers your question.
Thank you, Omarige. And then for the second part of the question, which reads, do we also expect this rate decline to be positive for the equities market? We will go to the equities desk with Symbiat for the response. You may go ahead, Symbiat.
Okay, yes, to respond to the other part of the question, I mean, like my colleague has already mentioned, the government are still active in the local fixed income market, although we've seen rates decline moderately. And historically, I've always seen an inverse relationship with fixed income yields and equities markets, investors trying to find higher yields, and they go into the equities market for better returns. So since we do not anticipate any significant decline in the rates, the effect in the equities market might not be that large, but obviously a lower decline in rates would have a positive impact on the equities market. Thank you.
Thank you for your response, Symbiat. We still have about 5 minutes before the meeting ends. If you have any further questions, you may go ahead and send them in. I believe Dapor, our group treasurer, would like to add to the question that was just asked. Dapor, you may go ahead and speak.
Okay, so just to highlight, like Omoroge noted, there's still been some aggression at the local space, and typically this is because market has been largely aggressive with respect to the auction. And when the DMO that clearly needs funding, when you look at again the revenue generation for the country, I think it's about 50%. They're about somewhere in that range, and expenses have continued to stay over 90%. So the country needs the money. And when we as a market then come into the auction and the market is saying, I like your risk, you can give me cheaper. It makes it easy for the DMO to continue to oversell basically, and that's what we've seen in recent times. And given the fact that we've not had OMO auctions as well, which makes everybody go into one basic point. But as at this morning, the CBN has announced an OMO auction. Again, we believe the OMO auction starts to come on the back of the fact that by the time they go into tap the Eurobond market and the CBN take the dollars, it has to give the government naira. And so it's coming basically at the right time. So with all this starting to happen, going into the end of Q3, we expect that again, rates will still trend down with strong Eurobond borrowings. And we expect that the local space, by the time yields dip to somewhere around 6% levels, we expect to start seeing a reversal, so long as the bond yields are still up there. And also, so long as the bond yields remain also up there, the equity space might not also see strong interest just yet, because that would be the next pipeline for the flow of things. But I see there are other questions, so I'll just limit my answers there and let the team provide answers to the other question. Thank you.
Thank you, Dapo. I see that we have no further. Okay, sorry. There's one more question here. It says, any opinion on what will happen to multi-choice in Nigeria after this huge tax bill? We will move to Luke, who will respond to that question. Good morning, Luke.
Good morning, Chidozie, and good morning, everyone. So with respect to this question, for now, clearly, you all know that MultiChoice is a private company, and it's not a public company, so it's not one of the companies we cover. So really cannot tell for sure the extent to which the tax bill is going to impact the company's performance. However, I mean, plainly speaking, for companies generally, when there is a significant increase in tax expense, definitely that's going to impact the company's profits after tax. I think that's all we can say on this company for now. Thank you.
Thank you, Luke. We have now come to the conclusion of our meeting today. On behalf of Vetiva Capital Management and our major partners at Frontier Africa Reports, we would like to thank you all for joining us today. We continue to encourage everyone to keep safe, and we look forward to having you join us again tomorrow at 8:30. Good morning.